another episode of the DHANDHA series presented by Omkara Capital. This is Ishrat Khatri. I am accompanied by my colleague Rikin Shah. Today we have the management of TRACXN Technologies with us. We have Ms. Neha Singh, who's the chairman and managing director of the company. We also have Mr. Abhishek Goel, who is the vice chairman and the executive director of the company. They are all set to do their IPO now, and I think we'd like to know more about their business, their future growth strategies, etc. So welcome, guys. Also, just a small disclaimer. As Omkara Capital, we do not have any vested interest in the company. This video is purely for educational purpose. So I think we should directly dive into the questions. Rikin, would you like to take the first question?
Yes. So, I think Neha ma'am wants to go through the deck first, and I think that will take us through their journey, what they've done, and I think should cover most of it. I think, ma'am, you can start presenting.
Sure. Sounds good. Sounds good, Rikin. Yeah?
Yes, we can see.
Yes,
Okay. Perfect. So let me actually start by giving a quick introduction for everyone about ourselves. So I'm Neha, one of the co-founders of TRACXN. We started TRACXN nearly 10 years back. Before that, I was an investor with IPO Capital, broadly investing in the private markets. Essentially, I'm a computer science undergrad from IIT Bombay. I graduated at the top of my class, receiving silver medal from then President of India, Mrs. Pratibha Patil. I initially worked at BCG, the Boston Consulting Group, and then Sequoia Capital. And then I moved to Bay Area for Stanford, where I did my MBA. And that is where we also started TRACXN. So US was the first market that we started off with. And all our initial customer in terms of private market investors, corporates were all in the 10-mile vicinity of the campus. The essential idea was that, if you look at public markets, public market investors have the luxury of using a lot of interesting platforms like a Bloomberg, Capital IQ, Refinitiv, FactSet, right? As private markets are becoming large, it'll also require platforms like these for the private market investors. And the idea was that can we build a global platform in this space, right? So that is how we started, and we really wished like a platform like this existed when we were investors. And with that, I'll also let Abhishek give a quick introduction.
Hi, I'm Abhishek. I'm one of the co-founders. Me and Mia started this company together close to 10 years back. And I am undergrad from IIT Kanpur, did my computer science there, and started my career in technology, worked with Yahoo and Amazon in their tech teams in Bangalore, and then joined a venture fund called Excel Partners, broadly investing in early stage tech companies in India. And then while we were doing our jobs, we thought a platform like this should have existed, and it would have made our lives much more simpler. So wherever there was a new upcoming theme, let's say fintech, and we wanted to invest in that, we would sort of do a lot of Google search and do a lot of scouting to figure out, ask around our friends when the fintech started, then you have. And we thought if somebody does it centrally for everybody, all the funds, then it would make our lives much more easier. So for a few years, we monitored the market, and eventually we realized that nobody else is building the platform. So we thought it's an interesting problem. So we started building it ourselves. And today we are 10 years old. We are almost 800 people, and we are very excited to start new phase of our journey as a public company now. With that, back to you, Neha.
Thanks. And just to give a quick introduction about our CFO. So CFO is an alum of IIT Kanpur and of IIM Lucknow. And he was a CFO earlier of another company, has been with us, for right from the starting of TRACXN. So, for everyone, I'll give a quick introduction about what is TRACXN. So TRACXN is a private market intelligence platform. We track data about private companies, startups, emerging technology sectors globally. Right? Easy way to think about us is as public market has a lot of platforms, we are building a platform for the private markets. Right? It's a SaaS-based platform with subscription revenues. It's cloud hosted, so users log in every day for their software and data needs. Right? And in terms of to give a sense of numbers, we track private companies and startups globally. Today, we have profiled more than 1.8 million entities. Our customer base is also global. So 70% of our revenue is outside India, 30% is from India. We work with more than 1,000 organizations across 50 different countries, right? Which includes venture capital funds, private equity funds, large corporates, including many Fortune 500 corporations. Right? And in terms of numbers, we closed last year at 63.5 crores of revenue from operations, total revenue of 65 crores. The revenue that you see is actually accrual-based revenue. We have negative working capital. So we actually do cash collection and invoicing upfront for the entire contract period. So our invoicing last year, our contract price was 70 crores. Okay? And there's interesting aspect of our business. So across the last 3 years, our revenue has grown at a faster pace than the cost. So there's a lot of operating leverage which is there. So if you look at it, our revenue has grown at a CAGR of 30%, while the cost have only grown at 4%. So you can actually, that's why this is one interesting thing that people find it, that, you know, your constant sort of margin expansion has sort of also happened. And this is just the nature, you know, of the business. And in addition to that, we are obviously fortunate to have had the backing of really respected funds like Elevation, Accel, Sequoia, and very marquee angel investors like Mr. Ratan Tata, Mr. Nandan Nilekani, founders of Flipkart, Sachin Bansal, Benny Bansal, founder and CEO of Freshworks, Girish Mathrubootham, right, founder of SlideShare. In terms of the company journey, we started the company in 2012. Subsequently, we launched the platform, and subsequently we've been expanding our data as well as offering, as well as our global footprint of customers that we work with. So that's brief about us. And then, you know, we have a fairly comprehensive platform, you know, for private markets. So anyone who's looking at private markets, there's a fairly comprehensive platform that is that exists. So we are among the top 5 globally in terms of the breadth of the companies that we cover. And you know, there's data on companies, there's data on sectors, data on investors, as well as software to help you integrate this data in your daily workflow. So similar to how you would have it in like the public market platforms, you know, you would have data, but you'd also have integrations to help pull that data in your daily workflow. We work with VC and PE funds, and they use it for their daily investment activity, deal sourcing, deal diligence. We also work with a lot of M&A teams who uses it for their M&A activities, tracking emerging sectors in their or emerging themes in their industries. One very interesting thing is our whole thematic coverage of sectors, which people find it very interesting. So for instance, if you're a private market investor, you want to look at sectors like robotics, right? We have a very detailed you know, coverage across all these sectors. So this is one of the things that some of our customers really like, right? We also have a proprietary taxonomy, which is there for the private markets. And we have a 82-member sector focus analyst team to be able to do this very efficiently. In terms of the market that we operate in, so we operate in the private market data space, which is large and growing, not only in terms of the number of participants which are there in this market, but also in terms of size. So for instance, it has crossed $9 trillion last year in asset under management. If you just look at last year, more than $1 trillion got invested across all private companies globally. More than $650 billion got invested by VCs globally. Of M&A deal volume was nearly $5 trillion. Right? So that's a large and a growing market that we currently serve. There are a few interesting aspects about our business. So you know, we are among the among the leading players in the private market data space globally. We also have a global customer base. So 70% of our revenues outside India, 30% is India. And you know, all the regions have also grown sort of fairly well for us, right? If you look at US as well as EMEA, as well as India and APAC, you know, all the regions have sort of grown fairly at a good pace with us, right? Today, we have more than 1,000 customers across 50 different countries, right? In terms of our revenue, so international is 70%. Within international, US is one of the largest, which accounts for 27% of our overall revenue, and remaining 44% is EMEA and rest of APAC. In terms of the customer segments that we work with, so we work with 2 key customer segments, which is on one hand, you have the private market investors, which includes your venture capital funds, private equity funds, investment banks, right? So that's one large bucket of customers that we work with. Another large bucket of customers that we work with are your corporates, which includes your large corporates, your corporate development team, M&A team, innovation team, etc. And obviously, technology is one of the key aspects of our business, which is there. So when you're talking about private markets, you're talking about millions of companies, tracking millions of companies globally. And there are new companies getting created every day. So we obviously use a lot of technology to be able to capture all these companies right, in a very efficient manner. So we have an 81-member team across tech and product. On the back end, we track more than 500 million entities today, right, which is all the entities which is there. We obviously enjoy the India cost arbitrage. So we have our team who's located in India, and we enjoy the cost structure of making in India and selling globally. So we have a customer base which is global. So we do enjoy the cost arbitrage which is there. Right? And in terms of board, we have a fairly experienced, board and team. So we've had like a Big Four auditor right from the third year of our incorporation. We've had PwC for the last 7 years, no qualifications across all these years. Have had a formal board work for more than 5 years, which has also ensured that the company is fairly high on compliance and corporate governance, right? And we also augmented our board to add 4 independent directors across in the last year. In terms of our team, it's a fairly built out team across CXOs, across VPs, AVPs. Most of our senior management are either from top schools, or they have worked in good companies like Goldman Sachs, Amazon, or in our alums of colleges like IIT Kanpur, Kharagpur, etc. Another thing that people, discuss is basically what are the key, how do you see yourself growing, right? What are the key levers for growth? So if you look at our user base, we have grown at 70% across the last 2 years. That continues to be one of the key levers, continue to acquire sort of new accounts, because there's a large addressable market which you are essentially working with, right? That is one strategy. The other strategy is, in the accounts that you work with, you're also able to grow over time. You're able to grow based on the number of users which is there, or based on the number of like teams within an organization that you work with, right? So these are the key ways in which we have sort of, even if you look at, we've grown historically. The other thing is that we augment our platform at a fairly good pace. So just in last sort of financial year, we added 11,000 updates to the platform, and because it's cloud hosted, it gets updated on a fairly seamless manner for an end consumer. So there's a lot of sort of updates that happens on the platform. There's a lot of data that gets added, so that helps us integrate, like have a better experience for the users that we are working with. The other interesting thing is that this market is growing at a fairly fast pace. And we are being among the few players who do want to capitalize on this opportunity. And there are, in addition to that, there are quite a few segments for which this data is also very relevant. And you want to, for who are also, for then the private market data is also very, very relevant, which you want to, go over time more deeper into. Right? So these, I would say, are, probably.
Sure, I think that was very helpful. Thank you, Neha. Just to go a little bit backwards on the journey again, right? So it's been about 10 years since the inception of the company. I just wanted to understand, we just wanted to understand what are the hardships that you faced in the initial year, and how has the product evolved over the years? I'm sure it started with something which was very different from what we are right now. So how has been the journey overall in the last 10 years?
Yeah, no, that's a very interesting journey. So initially, the idea of TRACXN got born when we were private market investors. So I used to work at Sequoia Capital, Abhishek used to work at Accel Partners. And this is something that we dealt on a daily basis, that, you are looking at a sector, you want to scan companies within that. You're meeting a company, you want to figure out who else exists within that market. So it's like your daily use case as a private market investor. And we started, sort of initially building things for ourselves, and we realized that, this problem is much bigger, and everyone is sort of solving, themselves, and there has to be a platform to be able to do that. So initial, this was way back when we were working, and then we started, initial launch with US as the market, because obviously US is a large market if you're looking at private market data. So we started working with funds and the corporates who are in that vicinity. Initially, the other interesting thing is that this is a very this is a very greenfield product, I would say, that you have to. It's not like a replacement that something existed and you're launching a better version of that. So, you had to work with the initial customers to figure out, okay, what module to launch, what things they would find it very relevant, what should be the ideal pricing, right? So the initial, 3-4 months was actually spent in working closely with these set of customers.
I think one of the things that really helped in early days was that instead of building the full product, we used to find the data, put it in an Excel, format it like a web page, and then show it to customer. So there are a lot of initial iteration that, okay, is this what you want? What kind of fields do you want? Is this an interesting company that we are showing you, or are we just wasting your time? So we did a lot of iteration in first 2-3 months, and that really helped to make sure that we are building something. Once you start investing in the technology, that is very expensive investment. So we did a lot of iteration. So we would, like, a lot of our customers were in US. We had, like, partially, Neha was still in US, I was in India. So we will send the output and prepare it in the day and then send it. Neha would show them printouts next day. So that iteration really helped to make sure that we are building what customer needs. And we both came from that background. So what that industry experience helped us was that we already had a lot of sense of what we needed when we were doing our jobs. But before building the product, we iterated a lot. There were 2-3 months where we were just sort of showing the output, make it an Excel, take a printout, and show physical copies. And when people were happy with that, that is when we started implementing the platform. So that really made sure that we didn't have to pivot a lot once we launched the product. Because technology, once you build a platform, it's a very expensive investment. You don't want to redo afterwards. So I think going to customer early really helped and reduced a lot of hardship that would have come otherwise.
So the name TRACXN is really unusual. So how did it come to?
That's a very interesting question. So, whenever a private market investor would meet a company, very often they would say, what is it? How's the traction? Or you would want to track a company and track what is the traction of the company, and want to meet the company when they are, having a good traction, and want to think about investment. So this is a very commonly used term among private market investors, and also this is very unique to this asset class. So when we thought about building a platform for the private market, this was an obvious choice, right? So, like, how's the traction? That's a very commonly used sort of term.
Right. Also coming back to the product now, so I mean, you gave a good brief overview on what the product is, etc. And from what I understand, there's a lot of data involved, right? There's data sourcing from, I don't know, n number of sources. So if you can just tell us more about where do you really source this data from, and how do you really verify the accuracy of the data?
Sure. So that's an interesting problem, because if you look at the private market, the relevant set of companies is a few millions, and there's fairly unstructured information about them. Yeah, you can hear me now, right? So I was saying that if you look at the private markets, the relevant set of companies is actually a few millions, and there's fairly unstructured information about them. So this is actually a fairly difficult problem to do that. If you look at the way we source information, you can broadly divide that into sort of 3 key buckets. So one is we get a lot of publicly available information about companies. So right now what is happening is that companies are having more and more digital footprint online. So, if you look at a brand, or if you look at very traditional companies as well, they would have a website, they would have, a lot of other sort of footprint online to help to communicate with the customers or tell about the company, right? So we gather a lot of digitally available information about companies. So that's one part of the information that we have. The second part is the sector coverages that we built. So just the understanding that, okay, this is a company which is into electric vehicles, which is, providing you this part of the value chain, or this company is into big data, providing you this thing, right? So that's a whole proprietary data that we create. Plus, the third thing is that, in terms of the companies, governments also actually require you to file a lot of amount of information even though you're a private company. So we actually gather the regulatory filings as well across various countries, right? So this is, sort of our source of information. Obviously, we use a lot of technology as well as sort of curation to be able to make it very actionable for the end consumers, because the customer segment that you're working with is essentially your private market investors, which is which require like very business sort of good data for taking business critical decisions.
Right.
for
So
a
the
layman,
cost, just a second, just the cost of acquisition of this data, I don't think it would be a lot, right? Is it a lot?
No, so the cost of acquisition of data, the whole stack of building that, like the tech stack and the whole process and curation, etc. Obviously, that is expensive, but the incremental cost to procure the data, that is very minimal. But you have to obviously build the whole stack, which is what we've built in the last, I would say the initial 5 or 6 years of our journey, of building up the journey. We have actually invested a lot in technology in building these processes. That is why also the fact that we raised external funding, we raised a venture funding. So when we started 2012, 2013 is the first angel round that we raised, from founders of Flipkart, Delivery, right? And then we raised our first institutional round in 2015, right? And we also got in investors like Mr. Ratan Tata at that time, angels along with in that. So because we could raise like a venture capital, we could invest in that whole technology and stack in building that. Right? I hope that answers the question.
Yeah, it works. We can go ahead, please.
so just for a layman who does not understand any of the technology, what kind of features can you simplify that your product offers? Besides, let's say there's fundraising data, that we data on financials.
Correct.
So broadly around those.
So, for example, fintech is a hot market today. And if you are an investor and if you're looking to, let's say, scout good startups in fintech in India, so we have a fairly deep coverage of all fintech companies in India. So that is one of the starting points of investors to discover these companies and go and reach out to them and meet them. Or secondly, if you have met a company and you think it's an interesting company, now you also want to make sure that there's no other company in the market which you should meet before you invest. So you get competitor data that this company competes with all these other companies in the India market as well as globally. So if you want to also learn from global comparables, so you can look at those companies and see what has been their trajectory. So these two are like simplistic way. Other than that, I think we give financials of the company, shareholding of the company is another thing that people like. So before, like when you're investing, you want to know how much each person holds, are there other investors? So all of that information you can also get through us. Neha, anything else you wanted to add?
Yeah,
no, this.
Okay, yeah, that was good. That was helpful. So, sir, just coming on the industry, right? So you mentioned that initially when you all started, you did not have a lot of products that was offering the kind of services that was required, right? What about today's market? What is the competition like? Considering you'll operate on a global basis, I'm sure globally there would be more companies you'd be competing with. So one, how is the industry like? How is the competition? And what do you do to stay on toes and kind of compete with them neck to neck?
Sure. No, that's a good question. So we operate in a vertical industry, and because of that, the number of competition set that you have is actually fairly limited. Like if you typically operate in a horizontal industry, you would have dozens of competition. But here globally, if you look at it, there are only about 5 or 6 players which exist in the private market data space. That essentially you run to. And currently, it's not like to like. Currently, there is fair amount of differentiation that exists among these players. For instance, in our case, we cover sectors to a lot of depth because a lot of private market investors, one of the key requirements is that I'm looking at these sectors and I want to look at the companies, emerging themes within that, right? So that is something that we do a sort of a very detailed coverage in. So right now it's sort of fairly differentiated. And coming to the second point, which is, how do we sort of keep on the toes? So yes, I think, this is a problem, I would say, 3 things. So this is a problem that we really relate to. So we were both, as I was saying, like private market investors. So this is this is a platform that we really want to use. So we have sort of a lot of domain experience, and we can relate to the problem set of the customers because we've also spent quite a lot of time in that industry, right? So that is probably one which keeps us really sort of focused in solving that every day. I would say second is essentially your technology platform that you have to be able to add data at a fairly fast pace. To give you an example, we today add more than 1,000 companies to our coverage every single day, right? So and there is so many updates. In addition to that, there is transactions which are happening, funding rounds, M&A rounds, news, right? There are so many other events which happen along with that also you have to update in a fairly real-time fashion. So there's a lot of back-end tech as well as process that you have to implement as a data company to be able to provide that data in a very real-time, actionable manner to the users. Right. And I think third thing which I would say is probably we also enjoy sort of the cost arbitrage, which makes us be able to invest a lot in technology and building that. So we make in India and sell globally, because of which we are also able to invest a lot in this upfront.
So just to give a brief, I've actually used TRACXN before.
Oh,
to get
nice.
data.
That's great.
Yeah,
That is incredible to hear.
to get data on an agri-tech startup competition. And in my experience of using the product, I was able to find the latest fundraise on TRACXN, but I couldn't find it on Crunchbase or PitchBook. So why is it? What are you all doing to ensure that you all are always up to date with those things?
No, we do a lot of heavyweight lifting to do that. So we track regulatory filings, we track press releases, we track any news which comes, any things. If a company mentions about their investor on the website, we would be able to track it. So you actually track a lot of these sources to be able to track and extract transactions out of it. And then we also have a team who actually manually reviews it. So you cannot just give a heuristic information, because essentially you want sort of a decent quality data. So you also have a team which sort of reviews this which comes about. So yes, there is and the other interesting thing that we also have teams that works across the time zones. So if there's a transaction which is happening in APAC versus in North America, so that is covered by team working across different time zones, so that you are able to cover within a few hours as well.
Right. So you mentioned that you have a lot of people employed for different things, right? Right from data collection to maybe customer acquisition, etc. So it's obviously more people oriented, and that is very well reflected in your P&L statements as well, where employee is a very big cost, right, for you all. So how has this evolved over the years? One. Second is that is it possible to bring down this cost with more and more automation? What I'm trying to understand is how much of it can be automated at any point in time. And today, I think employee cost is about 80-85% plus of the overall cost. So to what extent can this be brought down?
Yeah, the whole sort of a platform and data, etc. Right. So that is why people we are a very, I would say, capex light company. So we don't have to do a lot of heavy capex investment, etc. Right. So in that sense, it's a more of a software kind of a profile that you have, right? And that is why you see that people cost is one of the key costs which is there. In terms of how it becomes efficient. So if you look at it, our cost actually does not scale so much by the customer segment. So to give you an example, like if you look at last 3 years, our costs have increased at 30%. While the expenses only increased by 4%. So your cost base is a little bit function of what you cover, right? For instance, if we have coverages in like 50 different countries, if we cover, India or different countries in Europe and North America, so our cost basically scales based on that. And the data points that we cover on a daily basis, right? And it does not actually scale by the customers that you acquire or you need to serve. So I think that is one interesting aspect of our business, which people sort of really like. There's good leverage which is there, operational leverage that you build it, and then that is available for a lot of other people to use.
So
and
is
obviously
there any data?
Right. And
Oh,
just
sorry.
on one point, obviously there's a lot of automation that you have to do to be able to track it, because you have to work on huge data sets. Sorry, we can go on.
Sorry. So to understand further, yours is a business of operational leverage, like you mentioned, right? And so far we have been scaling at a very good rate. So going forward, what kind of customer acquisition strategies are we looking at? And if you can give us a brief on your funnel about how many people we approach, how many we convert, if
Yeah,
that kind
sure.
of.
Yeah. So in terms of customer acquisition, we actually have a fairly efficient customer acquisition process. There are two ways. So one is we are able to acquire a lot of customers through content-based marketing. So we don't do a lot of paid marketing, unlike a lot of other companies wherein you have to spend a lot on Google, etc., or paid sources. We actually don't do a lot of paid marketing because we are a data company. We are actually able to produce a lot of data, and we are able to use content for acquiring customers, right? So that is one wherein we have public pages, we have a lot of other like newsletters, etc., which helps us sort of acquire customers, right? So that's one. And the second interesting aspect is that we have a sales team who's actually based in India, but they span across all the time zones. So, and they close accounts over Zoom calls like these, right? So that is the other interesting point wherein you are able to sort of, have a team which is based in India, but they are actually able to sell to customers globally. So that's our sales team. Today, we have about 170 people, which is spanning across all the sort of time zones. And then you also, work with the customers for onboarding expansion. So that's done by another team. So that's how our funnel sort of works. It's fairly efficient in that sense because you are able to obviously enjoy the cost arbitrage which is there, and plus a lot of thing is content driven, so you don't have to like pay a lot for every new customer acquisition.
Right. So I think fairly recent strategy. But another thing is right now I see we have about 1100 plus customers, right? And it's obviously went up over the years as per what data we've seen. So just wanted to know, what is the customer retention one? How do we retain these customers? What percentage of customers take up another subscription? Because I believe the subscription is either quarterly or annually, right? So how do you retain it? And in case you lose out on a customer, what would be the reason? Is it that they don't need their services anymore, or are they switching to another competitor? So where is the customer going after that?
Okay. That's a good question. So actually, so we have our whole revenue is basically subscription-based revenue, right? The interesting part about subscription-based revenue is that once you acquire a customer, then a lot of them actually continue to stay for subsequent years, and for which you don't have to spend incrementally on sales, right, to keep the customer. So that that's one interesting aspect. So today, for instance, our retention is about 74%. That all the renewals, which is annual renewals, which is there for renewal, 74% actually continue. So a lot of the revenue for the next year actually gets booked from the customers that you had acquired in the previous years, right? So that is one interesting aspect about our business. If you look at it in our customer base, though we have grown at 30%, at the end, like 23% of our customers have been with us for more than 3 years. Right? So that is one interesting aspect that you sort of see in our base, and that is a nature of sort of subscription revenue which is there. So yeah, I think in India probably we'll be among the few SaaS companies to be sort of going for listing also.
Also, on the why would a customer leave you? I mean, did they require your service for a limited period of time, or did they have an internal software to do the services that you all were doing?
So typically there are different reasons. So some people may have like some people are figuring out, like, I think the other thing about this industry is that this industry, the penetration of this industry is also increasing, right? What that means is that customers have started adopting software for the first time in the last decade, right? So there are different phases. So some people start using it, some people are, have, been using it and figured out how to use it. Like 10 years back when we were working, there weren't, all these kind of platforms, right? So we had to do a lot of these work manually. So I think the other, because of this nature of the segment, which is, people are different phases of their, adoption cycle. So that is why you can see different customers, might behave somewhat differently. But over time, we've seen, sort of that increasing linearly.
So what I understand is that there is definitely a need for a product like yours, because for someone who is working to get data from the private market, it is a tall task, right? So I just want to gauge your mind on how you think the future looks like, and not just particularly to TRACXN, but just how as a country we might progress forward. There's more M&As, more private deals, more private equity investments following it. and how that could, shape up a company like yours going forward.
Right.
So if you look at it, people don't realize how deep startup market or tech market has happened in India. Because of evolution of IT companies, India has produced a lot of good engineering schools, a lot of good talent pool. And over time, a lot of MNCs opened up their shops. So we have a lot of people who have learned how to deliver at a global scale, which actually not many countries have. And because of this whole rich talent pool over last 10 years, we have realized that startup activity in India globally. And it's ahead of a lot of developed companies, like if you look at UK, Germany, France, these are all large economies, and our startup ecosystem is like relatively doing better than them. And I think so. This is all because of the infrastructure that was built by previous generation of IT companies who have done all these. They have built all the plumbing for the ecosystem to flourish now. And because of which we see the pace of innovation has over time increased. Software is getting penetration into a lot of industries across board. And as innovation become center of the conversation, there is more activity among players like venture capital, private equity, also in terms of M&A. So I think that is not just an India phenomenon, it's also a global phenomenon. And India has been a big beneficiary for the last 10 years. I think 10 years back when we were investors, India used to attract like maybe $500 million a year. And it scaled to like 15 billion like 4 years back. And last year it was like north of 30 billion. So it's a massive uptrend in terms of how much capital that we have attracted. And what is even more interesting is that a lot of this capital is not lean marked for India. A lot of these late stage capital was like lean marked for globally good companies. And India was able to attract large portion of it. So that is even more attractive that we are able to now produce companies which are high quality enough that we are able to compete for that dollar across all the countries and get like good share. Today, last year, India had a market share of 10% in terms of global unicorns. And that money is not necessarily marked for India. That is like basically global late stage money, which will go to any country which produces good ecosystem. So I think India has done phenomenally well as compared to all the other countries. And I think at least I'm a big believer on India in terms of innovation. I think we are leading the charge with respect to a lot of other countries. Obviously, US and China were ahead of us for last 10 years. But I think we have grown across all the rest of the countries. And that's, I think, a good stepping stone for us to build for the next phase of evolution.
Right, so I completely agree to that. Also, sir, right now there's a lot of talks about, the funding for PE/VCs kind of drying up, the liquidity issues across the world. Would that in any way affect your business?
So if you look at it in this, actually, if you look at private markets, so see this up and down actually happens. Like every couple of years, you would have this change in there, and then that would sort of recover. In the private market, what typically happens is that the funds which are raised for a longer duration. So if I raise a fund today, a typically horizon is from 6 to 8 years of deployment of the fund cycle, which is there. So, even if I'm going slow in 1 year, you still have a lot of dry powder that you're sitting on that you can deploy, in the other year. So in general, in this industry, if you were to say, it's not like, any downsizing which is happening, funds getting closed or layoffs happening. So that is still sort of continuing. But this up and down, that typically happens, which happens in the public markets. But still, these businesses are fairly resilient, and also it happens in the private market. But that does not impact so much because that's the nature of the business. They still are if they don't deploy, they're sitting on a lot of dry powder.
Okay. Well, if you don't mind, now we can move on to financials. Those kind of. Ishrat, if you want to start with that.
Before financials, I wanted to understand, we have a base of about 1100 plus customers, right? And I think we have only one product to offer. I think we charge about 6.5 lakhs or so is the revenue per customer. So are we also looking to expand our product offering and kind of leveraging the existing customer base that we have?
So yes, that's a constant, thing that we work on. Having said that, if you look at some of the the platforms that exist for the public market investors, it's one platform, but it's fairly comprehensive in terms of the modules that they offer. So similarly, for us also, it's one platform because that's easy for people to make decision, but there's a lot of modules that is there. So over the years, we've built 18 key modules, across all data, software, etc. Right. So there are so all the modules that keeps getting added gets added onto the same module, same platform, right? And you typically sell by users. So you increase in terms of your user-based pricing, and you have personalization features, etc., to be able to for a user to be able to use that very efficiently, right? So that has been sort of our strategy, and similar to like most large financial data platforms as well. And for us, the average price point per account is like 6.5 lakhs. So you're correct. And over time, you're able to sort of grow in terms of either by giving them more data, selling to more number of users, or by adding other features which helps to sort of personalize your daily workflow, or help to integrate the data in your worksheets, etc. Right? So that is a constant iteration that we continue to sort of add. So like the platform gets updated at a fairly fast pace, I would say, every quarter.
Right. So on the financials, so what are the kind of margins that you possibly see for this company? I mean, now we're obviously kind of moving towards profitability. And from what we spoke about, it's fairly about scale, right? Because you get operating leverage as and when you scale up. So at what scale will you be able to achieve the kind of peak margins that you would which is kind of possible in this industry?
Right. Yeah. So, so like we would. So I think ours is like a data subscription business, right? So, and it's a you can see that the sort of the margin expansion has happened in a fairly linear manner, across the years. Obviously, when you start, we are now in the 10th year. The initial 5 to 6 years were upfront investment in the platform, and then over time you are able to leverage it. So that has happened, that has continued to happen. And even if you look at where we have spent a lot of resources in the last 1 year has been in our sales and marketing engine. Like if you look at the headcount that we would have added, the teams that we would have increased in the last 12 months primarily has been in the sales and marketing functions, because once you have the data, then you are able to sort of leverage and sort of sell to more number of customers. So that is a constant thing that we are working on. And without sort of obviously talking about how the future sort of looks like, but this is how the past years have been looked at. Like it has been fairly linear in that sense, and that is we want to sort of grow on.
So a SaaS-based business is very high on ROICs, and is not that does not require a lot of growth capital. So when we're listing, we're doing it majorly to the OFS route. So is there not a rationale for raising a little bit money for growth, or are we good on that?
Yeah, no. So actually, we continue to invest very aggressively in growth. Having said that, in terms of if you look at a business, so one is we had we are also bottom line positive now. Second, we also have a negative working capital. So because of that, we do cash collection upfront. So we turned cash flow positive much earlier. So even if you look at last financial year was cash flow positive, that has increased. That continues to sort of increase, right? So not just bottom line positive, but we actually had turned cash flow positive even earlier. And thirdly, we still had we have raised 113 crores across the last year from and we also are adding that to the treasury every sort of every quarter, if you see, right? So that is the nature of the business, to sort of be very aggressive in growth and investing back in the business, but the business is able to sort of sustain the growth that we are doing.
Right. So I believe, I'm sure, I mean, obviously not giving very precise numbers, but I'm sure you have certain internals, qualitative and quantitative targets that you probably see yourself achieving in the next 3, 4, 5 years, right? So can you just give us a broad picture on what the internal targets look like?
So, like again, without sort of giving, sort of future numbers, but we continue to sort of fairly aggressively grow on these two accounts, like I was mentioning. So, like if you look at the user base, we've grown at 70% by 70% in the last 2 years. That continues to be one aggressive engine. Our whole sales and marketing is designed towards continuing to have the logo acquisition and start working with more and more organizations. So that continues to be one core area. We are doing a lot of things in, say, marketing, sales, etc. Right? That continues to be one key initiative. The other thing is also working with the existing customers. So the other beauty about subscription is base that you can grow on. That continues to be our focus with our customer success team, which works towards engagement, etc. Right? To how do you sort of take more wallet share from the customers that you exist already working with.
Right. I think that was pretty helpful. Anything else you want to add, Rikin?
No, I think that is a very, very good discussion we've had now. I don't think I have much to ask now.
Okay, sure. I think thank you guys so much for educating us on Traction. Looks like a fairly interesting business. And all the best for the IPO and the
Yes.
future of the business as well. I hope it goes really well.
Yes, we wish you all well.
Thanks, Ishrat. Thanks, Rikin. And also exciting to see that you've seen the platform earlier, used it. So
Yeah.
glad to also.
I think the
also
first thing
use
he said was that the platform is very user friendly and he's used it, so he was very excited.
Nice. No,
Yeah.
awesome to sort of.
So just
speak on
to add, the company for which we were looking for data ended up raising $10 million
Nice.
not too long back.
Nice. Awesome.
That's good.
Hey, great to have a conversation, both of you. Thanks so much for
Thank
having
you.
us.
Yeah.
Thank you
Look
so much.
forward to
Take care.
finally being a publicly listed company.
Sure.
Yes.
Good luck for that.
Good
Thanks,
luck.
Ishrat. Thanks,
Thanks.
Rikin. Bye.